What up, traders? What up, investors? Ken here from Dissecting Investor. And yes, the Mattress King has striked again. His next overall bet, if you're not familiar with the Mattress King within Wall Street Bets forums, this is the guy who went completely long purple mattress many months ago before it was in the $20, $30 range. He was buying it well below $7 or $10 and has held the shares and options and really just made a boatload from that. His next overall bet and what he's looking at is actually Pershing Square's SPAC stock. That is ticker symbol PSTH. You can see here. He does a very well thought out post on explaining on what he's doing, which potentially he's doing, of course, highlighting, as always, please do your own due diligence. Very key point here, and risk at your own cause, basically. So with that being said, we can look at what he's basically looking at. He kind of bleeped out his information, kind of made like a middle finger here, kind of thought that was kind of funny. But you can see the amount of volume that is coming in through, I think it's through multiple different accounts that he has at buying at certain prices at the $23.70, adding to these positions to continue going higher here. Again, not up a crazy amount, but again, he has $2.3 million in this deal overall, and he's up just a hair, basically $60,000 as of a couple days ago, or like a couple hours ago, lack of better words. With this being said, what's his game plan here? He kind of breaks it down what he's planning to do. I really going to link this down below. So definitely, this is a pretty well thought out understanding of what the SPAC really means. He really goes into the details of what the SPAC's vehicle's purpose is, and how it translates into being a little bit different than other SPACs on creating, instead of getting these warrants, and if the deal fails, those warrants go useless. It's really paying for the people to hold on to the shares until after the merger. So there's not just like that flip-floppy, crazy volatility that you see with some of these SPAC stocks going up and down, left and right before they even have the merger coming through. So be mindful of that. Be looking at this as well. He breaks down exactly what the premium is on net assets. Of course, it came out about $20. It has gone up substantially to around $24, $23 as we're currently speaking. So what are they looking for? Who's running this? Blah, blah, blah. If you're not familiar with Pershing Square, that's run by Mr. Bill Ackman. So that's this little good-looking dude here, good little silver fox here. You'd probably see him on CNBC. He's the guy who revitalized some old railroad companies, I believe, in the 2000s, maybe late 90s. Tried to turn around JCPenney and then also shorted Herbalife to major losses. But then also made $1 billion over the pandemic because he went crazy on shorting the market into the March timeframe into April. So that's little Bill Ackman there. He runs that Pershing Square fund. That's basically a huge hedge fund that he manages there. So what are some potential takeaways from where they can be looking at? This article, again, I'll look at this as well. So the $1 billion is investing in a special purpose acquisition company, again, that's SPAC. So they're going to be looking at some mature unicorns. So again, mature unicorns can be anything from some of the things that are being thrown around. Even Mr. Mattress King pointed out was like Stripe, Airbnb, Epic Games, Robinhood, et cetera, et cetera. Very mature companies. And the interview that he gave was saying that he's looking for a company that's worth between 10 to 15 billion. Again, what do you mean by evaluations? That can be very swayed in either direction. And then really looking for these, again, mature unicorns that have high quality venture-backed businesses. So as a takeover targets. So again, that you can speculate all you want on that. There's a lot of mature unicorns that are currently not publicly traded. Some of them that come to mind, like we just mentioned there before. So the thing I like about this guy, he's telling you what he's actually doing in his play. So he's clearly saying he is not doing any options, not trading a single option in this overall play here. So he's literally just buying all the common shares as well. So basically buying all these commons, and he's saying that, of course, gambling is buying for these options, especially out of the money options. So that being said, he's buy commons as they come with the warrants, and they're good dated call options, which is my preference. Some also is selling the 22.50 to $20 strike price is for small potato gains. Again, when you're selling puts or you're getting a little bit of premium here. And once we switch over to Tastyworks, is the account that I use, an affiliate link down below for setting up a fantastic options and equities trading account. That being said, he's also saying very clear, not doing options. He said if I would have to buy options, I would buy in the money options. So that's what the IM stands for there at $15. So going again, the stock's well above 15, so it's going to be in the money. Of just doing a strictly option play would be work, because again, if you're buying anything like in a delta of like $85 to $90, it's basically, or sorry, 80 to 90 delta, it's basically like owning shares. For you big ballers, he says, buying out of the money calls in December or later, March or June is better, but I don't think these are the best plays. I still believe commons, by commons, he means the common shares of the stock is just the best play. For you big gamblers who only do warrants, I think you might be a good play only if the deal goes through. Warrants are strike price of 23 and could be called for lower 30s, but not sure about that thing. Again, wish you all well. Godspeed. This is not investment advice. Do your own research. So thank you, my friend, Mr. Mattress King, for another fantastic due diligence there. Let's go ahead and flip over to the charts here. We can go look at that. Oh, wrong window. There we go. So looking at the chart here, again, this kind of came live around $20, and it ran up pretty fast, came back down, and now it's still running up here to that $24 range where we're currently kind of trading at as of today. Again, it came live at $20, so it has still a little bit of premium on it. It has not announced on what they're buying. It just has that little bit of like that 18 to 20% premium on it right now, because people are a little giddy, maybe a little FOMO, and really getting into these plays here. So looking at this play, looking at the stock itself at the charts, we're hitting a nice level here at the 1272 extension, which is around $23.90. The next overall target would be around the 24.50 to potentially run. Again, this is going to be heavily tied to any kind of announcement or where it could or cannot be going. Again, we have no idea what company they're looking to buy. So that's what comes with the SPAC. You're just kind of speculating that Bill Ackman, the Silver Fox, will have a fantastic idea on getting into XYZ company for whatever reason. So that being said, let's go ahead and switch over to Tastyworks. Again, this is what I use for options and equities trading. So basically, we're going to kind of go through the scenarios that he kind of highlighted out on basically just buying common stocks and then going all the way to the selling a premium to buying out of the money and buying in the money calls. So again, not too many options on the board here. We only have monthlies, and it's November, December, January, March, and June. So a very large array or smorgasbord of a buffet of options, but you have to be very careful on what you choose here if you want to decide to do options. For me, honestly, November won't even be in the question, because again, that's only 31 days away, and I'm not seeing anything major happening in that time frame. Would rather give myself a little bit more time to play these as well. Again, I'm also a huge fan of just buying the stock. If you're really just like, hey, let me just put in $200, $1,000, $10,000, whatever your limit is, just to kind of speculate on. Each of that numbers varies on what you willing to risk on to person. I have no problem initially maybe just buying some shares here and seeing where it goes. As a very speculative play, less than 10% of my portfolio. That being said, looking here around this January and March timeframe is something that kind of gets a little bit lucrative, especially in the March timeframe. We're seeing that $25, $30, and $35 strike price. Again, those are the out of money options, so there's going to be less time decay is not going to be really friendly to those folks. Something around like the 20 or even like what he stated, the 15 is going to be your better bet, because that time decay is going to be substantially less. So we can look at the time decay here. So the time decay on the 15th the $15 strike price on the 19th of March of 2021 is about 39 cents a day. You can see that right down here in the middle of the screen there, and we have a 92 delta going there. That being said, so we looked at the $30 one, we're looking for a substantial more theta decay at $1.20. So we went from basically 39 cents or 40 cents all the way nearly to $1.20. So only 4 times the amount of theta decay again. That option's only worth $2, so you're losing $1.20 a day. That doesn't sound really fancy, does it? And it's got a very low delta, and of course, the probability of profit is very low because again, it's out of the money and it's a very speculative play. So I cannot hesitate that enough. This is a very, very speculative play on what could be happening here. So be very mindful of that. This can go to zero. They can never have a deal. They could wait for 2 or 3 years before they find a deal. And this thing just kind of be bounced around therefore. And then even going down to that $35 strike price, you see that theta kind of kick up a little bit as well, with again much lower delta, probability of profit, and theta as well. Going all the way out like this, for example. So if we just like, hey, I know that they're going to buy XYZ in the next 30 days. This theta decay right here on the $30 call is still at $1.50 a day. That's pretty substantial for the 35 cents for that basically option to buy that. And of course, the higher you go into the money, that theta decay really starts deteriorating. So that's why his suggestion is if you do play options, make sure you buy within the strike price or within the money here. So definitely something to be looking for. Again, highlighting if you're a big baller, you're most likely going to be doing options, especially with the Wall Street Bets. That's the audience that he's currently talking to and what they would be potentially looking at. With this looking as well, this can easily go to 25, 30. Who knows what can happen? Again, very speculative. Be very careful out there, guys. Again, some key takeaways before I let you go. The stock could go easily higher, can go lower, it could be bouncing around. Just look around at some of the other SPACs that we've seen. Again, this one's slightly structured a little bit differently than those other ones because it's really rewarding holding the stock rather than just kind of bouncing around, maybe just trading it around it. So that being said, guys, please don't forget to like and subscribe. Again, this is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace!